trading desk. When we finish up looking at our charts here, when we left, we were looking at the chart of gold. And based on my read of this chart, we've had this breakout over the last couple of sessions or last couple of weeks. And that to me is basically probably a terminal, what they call a terminal thrust, which is...
Everybody's been talking about it. I think everybody and their mom has traded this breakout to try and catch that, to buy gold.
Right. Well, I'm looking at this as saying that's a head fake. And
it's a throw over.
It's a throw over.
Classic throw over.
A lot of times, I mean, you get that false breakout. And that's the...
Well, non-technicians are now technicians, and you're seeing it, everybody's a chartist now, and anybody can read a breakout, but breakouts are generally fade patterns if everybody can see them.
Absolutely.
So.
And all these charts tie together as we were talking. Let's go to the chart of interest rates. And this is a interest rate chart of the 10-year Treasury note. It's been pretty messy, as you can see up in here, but overall, my assessment is I believe rates are going lower.
Right.
Probably down towards 293, maybe down towards 315 first.
Isn't it interesting that we hit 4% there again in mid-June, and yet the market continues to go higher, and you would think with lower interest rates, the market would be struggling a little bit, typically. So there's some interesting counter mechanisms.
Well, it's diverging. It's not.
Exactly.
I mean, obviously, you have new highs for stocks, but not.
And then the last chart, I think, again, is oil. And if we could flip that one up real quick, and I think this talks to the divergence we had been talking about. Both. You've got a MACD there on the bottom, which shows again that failing momentum, falling, and price again made a new high again on a clear breakout there over 70. It hit 75. But is really struggling really for the last 2 months.
And all these are related. If the dollar, as we've been talking about, does rally, we're going to see all of these things drop. I mean, stocks should drop, interest rates should drop, oil and gold should drop, all relative to the dollar, just like we saw for most of last year.
And I think from a macro standpoint and an economic standpoint, we've had everything moving together: oil, gas. You've got gold, stocks, everything because of this huge influx of capital that the Fed has printed and given to banks.
Have created all these huge rallies, and now the major media has hopped on the bandwagon. We're seeing recovery. Stocks are up, oil's up, everything is up, and interest rates are recovering. And so that's why we see talk of a double dip recession, is because everyone's looking at recovery, and I don't even think we're seeing much of a recovery.
Well, again, Bernanke said the recession is over, yet 6 months ago there was no recession. We've got that going on. We've got...
Well, the economists said that back in March, we're in the greatest recession since the Depression.
Right.
And about a month ago, they said, we're out of it already.
And so we've got no earnings, we've got no jobs. Jobs continue. I mean, we still haven't peaked really in the job list.
Even Bernanke said, we're going to see a recovery, but it's not going to affect the job market. So all the people are saying, "Where's my job?"
Again, the
jobless recovery is that?
The jobless recovery. I mean, again, who is benefiting here? But the banks, the big banks, the trading firms who have got this capital. I mean, I don't know about you guys, but I'm still not seeing. You've talked about it. People that have perfect credit.
Oh yeah, the mortgage market is
can't even refi. Still can't refi, and they're paying their bills.
Absolutely. Right.
I think that goes back to when you look at the charts and you look at this declining momentum, I think that's a sign that the smart money, so to speak, has very little faith in this overall rally right here.
Well, the people jumping on stocks now are it's not the smart money. Correct.
Again, we saw there's been a lot of stories on the day traders. Day traders are coming back into the market, and it's always after you've had these big runs that you hear about day traders.
And this to me is a lousy trading market.
It's
one of those things.
You and I were talking about it pre.
You buy it on a Monday and you sell it on Wednesday. Well, that's not day trading.
Exactly. It's
pure speculation.
Exactly. Or it's and the breakouts aren't working. It's a faders market.
Yeah.
I mean, you're selling rallies and you're buying dips, but we're really not going anywhere.
Right.
Intraday.
And what's kind of funny, and we saw some evidence of this in the local paper over the weekend. The same people that never saw any of this stuff coming
are now the experts
same
again.
Ones now saying, we want your opinion on.
Again, you need to bang. They're banging the drums. You got the bankers, you got the real estate people, the same people that want it to be back to 2006 heyday. The advertising dollars are gone for the papers, the local papers. It's gone. It's not coming back. Blogs are taking it because there's better reporting out there. Unfortunately, they've got better sources.
Obama came out on the weekend and said we need a newspaper bailout now.
Hey, always check your sources, but again, don't talk to me about statistics when the statistics that the local paper specifically talks about are pretty much hedonic and good for them only when it's good for them, but when it's bad statistics, they don't talk about them.
Sure.
So you can't have it. You cannot have your cake and eat it too, unfortunately, and that's what we're seeing out of so many papers, and it's not valid journalism.
No, it's not. It's not journalism anymore.
Well, they're affected by the markets. I mean, back in March when the S&P was making that historic low, everything's gloom and doom, and now that we've had this massive rally. It's the newspapers are hopping on the bandwagon, and
Right.
things are great, and we're going to have a huge recovery, and et cetera, et cetera.
Right.
Well, we got to take a break here, but when we come back, we're going to finish up our show today with our fantasy finance section. You're watching The Trading Desk on COTV, channel